Hey, it's Tom here and welcome back to the channel. So in this video, I want to focus on one of the key learnings that I got from an older Warren Buffett clip. It's a very important piece of information because it basically tells us where we should be spending our time as investors. If you've been investing for any length of time, you'll know that there is a lot of constant information that comes to you as a stock market investor, but really only very few parts of that information are actually relevant to your own investments. And Warren Buffett described that really succinctly in an old Berkshire Hathaway annual meeting, and that is the topic of today's video. So I'll roll that clip very shortly, but before we get into it, we do have a sponsor for today's video, and today's sponsor is Sharesight. Now, Sharesight is the tool that I have been using for the past couple of years for a couple of main purposes. So the first purpose is basically just to track my returns. Now, I'm someone who invests from New Zealand, so I earn all my money in New Zealand dollars, but I actually invest in multiple different countries. So I invest, yes, here in New Zealand, also a little bit in Australia, and quite a bit in the US. And that can make calculating things like an annual return actually quite complex. So I'm constantly contributing cash to investments in different countries. Those investments may have a capital gain or loss at any point in time. I may get dividend income, and of course I have exchange rate fluctuations as things like the US dollar to the New Zealand dollar move around in terms of their relative valuations. So in order to calculate an annual return from my portfolio, rather than spending hours and hours in Excel spreadsheets, I choose to use Sharesight because it calculates all of that stuff really easily for me. The other thing that I use Sharesight for at kind of key times through the year is also tax reporting. So Sharesight automatically gives me tax reports that I can basically give to my accountant, and it really speeds up the information flow to my accountant, so I'm not paying them to put together different bits of information in order to work out my tax position as it relates to my shares. So those are a couple of the key reasons why I use Sharesight. It also actually integrates with both of the brokers that I use, so both with Hatch and also ASB Securities. I can automatically pull my trades into Sharesight to build up a picture of my portfolio. A really useful tool, and if you're interested in checking out Sharesight yourself, you can go to the link sharesight.com/investingwithtom. They do actually have a free version that you can use for as long as you want, but if you end up signing up for one of the paid subscriptions, that link will get you 4 months free off of the annual option when you go to do that. So if you're interested in checking that out, that will be linked down in the description below.
I have two questions. Question one, your view on world financial business environment in the next decade. Question two, U.S. position for economic competition in the next decade. Thank you.
Well, you've asked two big questions, but you're going to get very small answers, I'm afraid. And that's no disrespect, but we don't think about those things very much. We just are looking for decent businesses, and incidentally, our views in the past wouldn't have been any good on those subjects. And we try to think about two things. We try to think about things that are important and things that are knowable. Now, there are things that are important that are not knowable. In our view, those two questions that you raised fall in that. There are things that are knowable but not important. We don't want to clutter our minds up with those. So we say, what is important and what is knowable? And what among the things that fall within those two categories can we translate into some kind of an action that is useful for Berkshire? And we really, there are all kinds of important subjects that Charlie and I, we don't know anything about, and therefore we don't think about them. So we have our view about what the world will look like over the next 10 years in business or competitive situations. We're just no good.
Okay, so as expected, some very wise words there from Mr. Warren Buffett to focus on things that are both important and knowable. And that is a really useful analogy for someone like me. So I am getting more and more time poor, it seems, as the weeks and months go on. I work a full-time job, try to put several videos a week up here on YouTube, train for my sport 3 or 4 times a week, and then also try to have, of course, a personal life outside of that as well. And also try to study investments to, keep trying to get businesses into my watch list and potentially my portfolio as well. So anytime that I'm looking to study investments, it's really important for me to kind of streamline that process and be as efficient as I possibly can be with trying to understand different companies. And one of the main ways that we can do that is to follow Warren Buffett's advice price and focus on things that are important to that business and that are also knowable. So I want to basically step you through some examples of how I've applied this kind of thinking to my own portfolio and my own sort of process as I try to understand different companies. Okay, so let's start with some of the really obvious things, the things that are unimportant and unknowable. So we can put a whole bunch of stuff in this bucket, and I'm really not going to spend much time on it because there are things that are quite obvious. So if I'm looking to understand a business like Facebook, for example, things like, let's say, the number of pieces of toast that my toaster has ever cooked. That is something that is unimportant to Facebook and also unknowable because I don't have any sort of toast counter on my toaster. So that's something that clearly goes in that box, and those are obviously things that we should really not be spending our time on if our goal is to try and understand Facebook from an investment perspective. So unknowable and unimportant is the first one. We will get that one out of the way very easily. The second category of things that we can get out of the way immediately are things that are knowable but are still not important. So for example, if we're trying to understand Facebook still, going out and understanding the favorite tomato sauce brand of people here in Hamilton by running some sort of survey is really going to be unimportant to Facebook. So that is clearly something that is probably knowable if you do enough work on it, but it's really unimportant to the investment case. Now, I did actually put a tweet out on this topic just last night as I'm recording this video, and I did actually get a funny reply from Value Down Under on Twitter. He responded to me saying that the top speed of a mantis shrimp is really not that important to investing, and he kind of came back with a bit of a joke about the growth rate of prawns, but it actually reminded me of a very good point as it relates to this topic. So it is really important to be able to distinguish between what actually is important when it comes to particular businesses. So of course, if we're studying Facebook, the favorite tomato sauce brand of people living in Hamilton is not important. Now that is clearly not important, but something that you should really understand when you're studying Facebook is to try and get a handle on what actually is important for each particular business. Any company that you look at is really probably only going to have a handful of key drivers that really push its business forward. So something I've been looking at recently is a business called Alibaba. Alibaba basically has a few different key business segments. So they have e-commerce, they also have Ant Financial or Ant Group, which covers many of their different financial services, and they also have a cloud business. So if we focus on the e-commerce business, for example, there are going to be a few drivers of that business that really help us to understand whether that e-commerce sort of arm of Alibaba will continue to grow or not. So it might be things like, what does the competitive landscape of e-commerce in China look like at the moment? What is the general growth of people adopting the internet in that country? What are the different fee structures of all the different e-commerce platforms, and how does that sort of, in our view, change the potential growth prospects of the e-commerce business at Alibaba? So these are all things that start to become knowable, and it also will become quite important for understanding the business as well. Now, the next category I want to talk about is things that are definitely important, but things that are not knowable. And this is probably the biggest category where people waste the most time. So there are things that are very, very important to investment returns that regardless of how much time you spend trying to figure these things out, you're just not going to be able to get there. So these would be things like, what are the earnings going to be of a business next quarter or next year. Now, you can spend a good amount of time getting a feel for that, but trying to get into minute details and try and come up with a forecast with a very tight range is basically going to be something that is impossible to do. I'm sure it's going to be very, very important to your returns, what a business earns next year and 5 years and 10 years from now, but being able to predict that accurately is not possible. It's important to, of course, be directionally right in those things, but you're not going to be able to project those types of metrics down to 2 decimal places. And I was just watching a CNBC clip yesterday with Jim Cramer, as usual, talking about all things investing, and he said, there's an earnings call coming up for, I think it was Nvidia tonight, and word on the street is these earnings are going to be very good. Now, that is a classic example of something that's quite important for investors in that business, but really is unknowable. It's pure speculation. It's really not something you should be spending your time on. Now, a few other things I would put into this category for myself personally, which I have actually spent a fair bit of time on in the past, and I'm trying to spend less and less on it, frankly, is basically macroeconomics in general. So I would probably subcategorize that into two main aspects. So things like interest rates. Now, interest rates are very, very important for valuing basically any financial asset. If you believe any asset is worth the present value of its future cash flows, firstly you need to understand the future cash flows, of course, but understanding the present value of those future cash flows is going to be pretty heavily dictated by interest rates. So interest rates are quite important when it comes to calculating an expected return. But no matter how much time you spend trying to predict interest rates a year, 5 years, 10 years from now, you're just frankly not going to be able to do it. So it's one of those things that you really shouldn't be spending a lot of time on. Sure, it's important, but it is not knowable. The other thing that I would put in that camp that has been talked about a lot recently is inflation. Now, I've made a couple of videos on inflation. Again, it's something that will be quite important to future investment returns, but again, it is not knowable. So it's not something that we should spend a lot of time on. I've talked about it generally, like I say in previous videos, but really it is not something that I have conviction on whether there will be high inflation or low inflation moving forward. And if you watch some of those inflation videos that I put together, you'll notice that I basically don't have really an inflation strategy. I'm not someone that's going out and buying gold miners, for example. I'm buying into good businesses at reasonable prices, ideally that have pricing power and can work through high inflation or low inflation periods just fine. And then, of course, that leaves the final square in our grid, which is things that are both important and knowable, and this is where we should be spending a lot of our time. So again, to put it back into the Facebook example, there are a lot of metrics that we can look up on Facebook in order to understand that business. So we can look at the monthly average users, the daily average users, we can look at the revenue per user and how that has grown over a period of time. We can look at the operating costs of Facebook and how that has grown over time as the general business has expanded. We can understand the track record of the management team. How have they treated debt in the past? How have they reinvested in the business? What's their sort of capital allocation strategy? And do they have plans to ever return capital to shareholders through dividends or share buybacks? Now, as opposed to the last grid piece we were talking about with things that were important but not knowable, and I said, we probably shouldn't be spending that much time focusing on macroeconomics, we're starting to do the reverse of that. So we're starting to really focus on the micro, get into the minutiae of different businesses and try to understand the nuances and, again, the key drivers that push a particular company forward. And Warren Buffett, in the full clip, which I played a small part of just at the start of this video, I'll link that full clip down in the description if you want to go check that out. Warren Buffett actually talks about this in the context of something like Coca-Cola. Now, Coca-Cola in the very early 1900s was trading at something like $40 a share. Since it went public around that time, I think it went public around that time, as he was describing it, the stock actually went down 50%. They were having several problems with some of their bottlers and also with sugar and various other problems as well. And if you had perfect foresight also on macro events, so if you did happen to know some of these things that were unknowable, so you saw the 1929 depression staring you in the face, you saw a couple of world wars coming, you saw massive inflation through the 1970s and 80s and hugely high interest rates, for example, there would have been actually a lot of things that may have actually scared you away from making an investment in Coca-Cola. But really all you should have been focusing on is the micro. What are the key drivers for Coca-Cola's business? And if you had been able to see the historic growth of the business up until that point and make some sort of judgment around future growth moving forward, maybe that's venturing slightly into unknowable, but you should be able to have a pretty well-informed opinion on that by studying the historic performance of the business and the key drivers of it, you would have been able to see that Coca-Cola had an extremely long runway for growth. And if you had bought those shares after they were down from $40 a share to say $20 a share, down about 50%, if you had reinvested your dividends from the very early 1900s to when this Buffett clip was taken, that investment in Coca-Cola, that one share of $20 would have been worth over $5 million. So all that really is to say that there is a lot of distraction in financial markets, and it's really important to kind of streamline your process and focus on really only one of those 4 grid squares like I've been talking about through this video. Focus on things that are both important and knowable. All the rest is pretty much noise, and sure, you can have a view on things like inflation and interest rates, and if you really want to study the favorite tomato sauce brand of people in Hamilton, New Zealand, you can do that as well, but just recognize that if you're trying to understand Alibaba or Facebook or Costco or Monster Beverage, it is really probably not going to be that useful a way to spend your time. So that's it from me for this one. I do hope you enjoyed the video. If you want to check out Sharesight and get 4 months free off an annual subscription, head to the link sharesight.com/investingwithtom. Again, that will be linked down in the description below. But that's it from me for this one, and I'll see you in the next video. Cheers.